Welcome. This is Louis Fine, and we have a great show for you today with John Trautman. He is the founder of the Real Estate Knowledge Institute, or RECI, and you can learn more about RECI by going to realestateki.com. John is a veteran real estate investor, a very successful one, and he's going to be addressing a number of points on this program, beginning with the most obvious, which is the importance of investing in areas you are familiar with, areas you hail from, areas you live in, areas you work in, because that is a key differentiator between success and failure in the marketplace. But before we even get to that, let me bring John on the program and welcome him. John, welcome to the show.
Well, thank you, Louis. Thanks for having me on today. I appreciate it.
By way of brief background, so listeners can have a better appreciation of RECI and what you do, tell us about the Real Estate Knowledge Institute.
Yeah, absolutely. RECI was developed over, it's been a course of a long time, but what we did is we've noticed in various markets, like lots of issues, people needing help. There's a lot of new investors out there, or investors in general, that just need a better place to, connect, get information, be able to grow their network, grow their portfolio. And we have found through going out to networks and groups and everything, there just seems to be a lack of collective efforts in doing that. And so we've gathered a great group of very, very successful people in the real estate field, specifically, obviously, investing, and it could be from residential to commercial real estate to even lending. And we've collaborated as a group and been able to pull together all these resources and help people in need. And we found that it doesn't matter if you're, again, a seasoned or new investor. We don't always know everything, and that's why it's a group effort as well. So we have, like I said, a great group of people that we work with.
Well, that's a good point, because it brings us to the overarching theme of this discussion, which is the importance of investing in an area in which you're familiar, as opposed to a city or a town or a state that you do not live or work in, have not been to, and are unfamiliar with in general. Tell us why it is so important to avoid investing in properties in cities or places that you are not familiar with.
Yeah, I feel like this is a big topic and a very important topic to touch on, especially in today's environment. If I could just talk about why it's so important to me to touch on this, and we're working with, and we see a lot of people, and there's, for lack of better words, there's a lot of gurus out there right now, and you hear them talking, and I've heard them personally talk, and I think a lot of them have great information. They talk about the importance of them, and our thoughts and beliefs align on a lot of points, these mentors. But one thing that I heard recently, I was actually at an event listening, and one of the gurus was talking about the importance of being able to not invest in real estate, not stocks. You want a hands-on type of investment. I like that. I mean, I've followed that rule for the last 20 years, investing in real estate. What happened through this event is, towards the end of it, they talk about being able to invest in their properties. Well, their properties are in specific areas across the country that are a little bit more depressed. And what they do is they go through, they buy the property for inexpensive, fix it, rent it, and then sell it to you. I mean, essentially, they're taking all of the things that they want to teach you out of it and just give you a play property, leaving no meat on the bone and really just a residual income. Is that bad? Well, the reason I want to talk about that today and the reason I like this topic so much is because I've done it. I've invested out of my area. So if we were to go in on that, talk about it, you just simply don't know the area like you do your own. I mean, that's a pretty big piece, right? I mean, you're investing in an area potentially out of state that maybe you have no intentions or they have no intentions of you going there. It's different. This is kind of weird to me because you want to know the places. You want to know the area. Any issues with that area, good or bad? How about the neighborhood? Is it an up-and-coming neighborhood? Just because it seems good on paper doesn't always make it so in real life. And so it's important that you know the area like you do your own. I mean, you know your own neighborhoods or your town or city or even nearby cities a lot better than you would someplace out of state. So also, this is where you have your network. So it's just not the same when it's not in your own area. You can't see
now that's a very commonsensical point of view, an important one certainly, but there is also a significant financial risk when you go out of your comfort zone, so to speak, and potential investors could very well lose everything. Tell us more about the financial risk when you consider a property in a city or state that you are not familiar with.
Absolutely. We've seen a lot of people lose a lot of money investing out of state without the proper guidance. And really when we look at it, it's like how much money do you really make? And when you fly out, you have to do things many times over again. You have to pay property management and maintenance. We've had a lot of investors who have worked with property management, and I'm not saying this is all of them, but I'm just saying property management companies where they've maybe been ripped off. These companies just don't have the same skin in the game that you do. They don't. Plus, they're taking 10% right off the top. So that's of your gross income. You may think that you're spending less time on it, but the reality is you're tracking people down. You're making sure they did the work, they showed up, they did it right. So whether you're a new investor or seasoned, can you take that financial risk? I mean, we've seen people, for one, I'll give you an example. We invested in Detroit heavy at one time. We were offered by a gentleman over 100 houses just to take them because he was so lost in the process because he didn't have things put in place. The management company wasn't doing what they said they were going to do. He was simply going backwards on all these properties. People were breaking in. They were taking things. He literally lost that entire investment. And it doesn't matter when you start to tally up, what these things cost, how much money he was losing. We're talking 100 houses, not a house, but 100. Well, whether you're seasoned or not, can you financially take that risk on? I don't want to take that risk on. We did, Louis, and that's why I'm here and I want to talk about it. We haven't seen a lot of people make it through, but we did, but we were flying out. We were very hands-on, and it was a very difficult time. But keep in mind, we've been doing this for 10 years. We already had a lot of properties seasoned under us. And to do this, we knew what we needed to do, and it was still, in my opinion, we got lucky on some of this by finding some of the key people. But I don't think that's the norm in the situation. So,
I know one of the other points that you have raised repeatedly in offline conversations is that when you invest in a property that is in a different city or state, you don't have the opportunity to readily and regularly visit that property, and that complicates things. Tell us about that.
Yeah, we've consolidated and recently over the last 5 years just focus in our yeah, you're right. Going to the property, it means a lot because you have pride of ownership by going to and seeing your investment, right? You get to meet with the renters. We meet with every renter before they move in, whether it's commercial or residential. And I think this is big because having a connection with them, it just makes it better, puts a human element to it. I know that might sound a little cheesy, but it's true. If someone knows you, they're more likely when you call or collect rent, they're going to pay it versus someone detached, if that makes sense. You also get to see, work that's been done that you had contracted to be done, any potential issues that could be arising with the property, maintenance or deferred maintenance, if it's being done or not. The other thing is just by simply going to the property, you could have a neighbor talk to you about selling, so there's missed opportunity as well. But again, there's the potential issues with property, potential issues with the city. There's all sorts of things that you're not going to know unless you're there, boots on the ground, going to the property. You could have issues with tenants. Maybe you have a commercial piece and they're living there. We've had out of state, we've had fines from the city for the grass getting too long, right? So those are things that if we're there, we could track those things and see and make sure that they're addressed immediately and not waiting. So going to the property and visiting it is huge. You get it, like I said, all these things are reasons, again, why you should invest locally.
Well, that also brings up another point, and that is you have to outsource everything if you're buying properties in a different city or state, and there's a huge trust factor involved with people you, for all intents and purposes, do not know. What's the story behind that?
Yeah, we call that span of control. I mean, when we grew into multiple states, we lost our span of control, and you need to redevelop all new networks, and that's very difficult. So when you have to outsource everything, whether that's property management, property needs, maybe you need agents. They just don't have that same skin in the game that you do. We in nearly, let's say, just under 100 properties, for example, we've, for property management and agents, have had less than 5 that they've actually rented. So you could do your own showings, you could rent, and I'm not excluding all property managers or agents, but people just don't have the same vested interest renting your property, fixing your property, and everything in between. And outsourcing, you have to rely on even outsourcing your eyes, because who else is going to be there? You have to. There's just so many more people that you have to hire and trust just to do some simple tasks sometimes, which means in a lot of cases you have to grow or buy in bulk to make it make sense. Sorry, I know I got off topic about buying in bulk, but that's probably more in the financial risk category. But these are things that you have to outsource, and it's at this point, why not just invest in the stock? If you don't want to touch it, you don't want to see it. Yeah.
Because you do raise the risk factor, and I'd like to conclude with this. You can, as a result of all of these things, lose everything. Remind listeners about that point, because when you look at a property outside your comfort zone or your area of expertise, that financial risk multiplies exponentially.
Right.
So why is that I know we've discussed this before. Why is that so critical?
I mean, you're building this, and it's something that I think when you want to have an exit strategy at some point, whether that's just purely cash flow or being able to develop a team and a system. And if you do these things wrong and you depend on everybody else, it sounds like a weak infrastructure foundation for a business model. It's really that simple. And the more pieces that you can control, I think the more success you will have financially.
That's a very good point. I just want to summarize that having the expertise and knowledge of investing in real estate in an area that you're familiar with, combined with hands-on maintenance and regular visits to the property, an understanding of the neighborhood and the marketplace in particular with regard to this or that property in an area that you understand, those factors are very determinative of whether you will be successful or whether if you pursue properties elsewhere in cities and states you're not familiar with, you can in fact risk and lose everything. People can learn more by, of course, going to realestateki.com. Recce, the Real Estate Knowledge Institute. John, a pleasure having you on today.
Thank you, Louis, for having me on. I appreciate the time and to address these.
Thank you.